Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the market rundown heading into Monday, April 17th. So we've got SPY, IWM, and QQQ here. SPY had an extremely end of the week, closing down at the lows on increased bear volume and breaking all supports that we had formed the past 2 weeks. So we only have this last support here in the short term looking back on. That's 231.61. And if we break that level, we continue this lower high and lower low pattern, which started in March. And the shift in the trend was indicated by the loss of the middle Bollinger Band all the way back at the end of March. And since then, it's been lower highs. And now we're watching to see if we break 231.61 and create another lower low. So the bears are in absolute full control of the short term right now. We have gaps to the downside to be keeping an eye on. And looking at the weekly time frame, we're starting to see the first weakness that we have seen on the weekly time frame since the election, really. We have not lost the exponential moving average supports until now. We have a bearish MACD cross on the verge of a bearish TCG cross, and we have the middle Bollinger Band coming up. So it's all about 231.61 support as we head into this next week. And if we break that level this next week, we know the bears continue to remain in full control. In order to change that, we have to break this downtrend resistance line as step number one. And personally, I use trend lines as a guide, and definitely I utilize them. But for me, it's all about price action. So in reality, to see the bulls really make a turnaround, I'm going to have to see a break of the lower high pattern, which is going to require a break of the last high attempt, 237.39, to break this lower high pattern. So bears have control. We're looking to the downside, and we need to be cautious as short-term bulls. Checking in on IWM, also seeing that weakness. We had a very clear bear break here as well, and this was a tightening pattern forming over weeks. Very clear lower high pattern that had been forming, and also higher lows. And by breaking this higher low here from 133.83 and closing below it, we now have a loss of that higher low pattern. So it's now just lower highs and now our first lower low. We're looking down at our double bottom of 132.40. We hit that low of the day at the end of the day on increasing bear volume. And the weekly time frame had multiple inside bars in a row showing that range tightening. We ended with a bearish break. We had the exponential and the middle Bollinger Band moving averages as resistance, and we're looking down after 132.40. We're looking down at the next level of 129.38, so we are shifting to the downside. You can make the argument that this is a bearish reversal head and shoulders pattern with our left shoulder, the head, the right shoulder, and the neckline would be down at the 132.40 level, but not really as clear as a textbook head and shoulders pattern would be, but the psychology of the pattern is there. And on QQQ, we're also seeing the weakness now. Technology sector has been the strongest, and it is now seeing the first signs of weakness since the election, and that is taking the markets to the downside with it. So a weak close here as well. Lower highs, lower lows, big upper wick of profit taking, and we're just looking down at the low of March, 129.40. So QQQ on the weekly time frame, bearish reversal candlestick confirmed for the first time since the election. And you'll notice in this video, I keep saying for the first time since election. So these are the clear bear signals standing out to us, which have not occurred in over 4 months. So we're closing right on the exponential moving average support of 130.37. If we lose that level of 129.68, the low of March, and we see lower highs and lower lows start to play out, we'll see a bearish MACD cross, a bearish TCG cross. So in terms of the pullback that we are looking at, IWM is the furthest along. In terms of the weekly time frame, S&P 500 is second, and then QQQ is holding on for the bulls the most significantly, but it is still right on the verge of following behind and following those other markets. So Bears are in control, and now we are going to watch how much downside, how much consolidation is coming. It's not an all-out dump by any means on the daily time frame, but it is showing us clear weakness. So we'll keep checking back in here, certainly watching the shift and how things are playing out, and there's some really overextended names to the upside that are now beginning to consolidate on their weekly time frames, looking at Apple and Facebook and all of these tech names that have been so strong. So I appreciate you watching. I hope you have a great holiday weekend, and we will see you on Monday.